In today's show, we'll be covering how Vitalik is not staking his ETH and what this means for you if you are somebody that has ETH staked, the outlined risks around that, as well as how Bitcoin's futures is hit an 18-month premium rate, and consequently that could be indicating a major market move. So let's get straight into the show, and I thought let's start off with the ETH BTC ratio over here, because you can see that ETH BTC is struggling to get through the upper region. We had a big push up over here. We had a strong down candle on the day, which happened on Monday, and consequently we've been continuing to oscillate around this region. If the bulls can hold price above the 0.25 level over here, which is going to be your range quarterly zone coming in at 0.062, then potentially they could have one more attempt at pushing it towards the top side of the trend line. So I'm going to move that up. That means, again, still percentage wise, you're looking at about a 3.7% move to the upside, and then a likely rejection from that zone. You have your stochastic RSI, which is now starting to reach, and consequently you can expect that that would in fact roll over. So let's move on over here. If we look at this video from Vitalik, this is something that came out. Why are you staking all of your ETH on validators when even Vitalik thinks it's far too risky? I'm going to break down what those risks are for you in a moment. First, let's go through the video.
Probably the biggest reason why I personally am not just staking all of my ETH and I'm instead staking a fairly small portion is because if you stake your ETH, it has to be on the keys that access it have to be public on some system that's online. And for safety, it has to be a multi-sig, and multi-sigs for staking are still fairly difficult to set up. It gets complicated in a bunch of ways. Probably the biggest.
So this is something that the vast majority of the public are not aware of, and I think that it's worth your while to sit through to the end, and let's break down exactly what these factors are that may affect you, and what do you actually come out with at the end of the day percentage-wise once you consider all of the risk factors. Let's have a look at this one as well. Another gem from Ethereum insider Justin Drake. He says here, he doesn't stake much ETH because he knows too much about the real risks involved. I'm going to give you those real risks, and why aren't these risks fully disclosed to the ETH end users, which is going to be you guys back at home? Where is the transparency? So let's have a look at this video.
Personally, I'm staking actually a little bit less than the average. So there you go.
What's the incentive? Why aren't you staking all of your Ether? Why haven't you just aped all the way in?
I think part of the reason is that when you make the sausage, you know how it's made. And there's a bunch of tail risk, that is difficult to quantify.
So not really a major vote of confidence when it comes to staking ETH, especially if you're hearing this from the key players on the network. Well, these are ultimately the reasons. Let's have a look at this chart over here, or at least this tweet from SEC, which goes and breaks it down, the exact reasons why. And he says some things to consider when you are looking to stake your ETH. So let's break it down, and then we'll decipher what do you come out with at the end of the tunnel, right? If you do stake your ETH, what percentage are you looking at year on year? So he says potential capital gains implications when swapping ETH for a liquid staking derivative are obviously going to affect you. The fees involved from validators can also take up to 25% off of the rewards, which likely then also have income tax on rewards after the fees, which go up to 45%, depending on which country he's in the UK. So if you look over here, smart contract risk, right? You have liquid staking protocols consisting of smart contracts, which could in fact contain bugs. This is not taboo to the market. It's something that's happened many times before, and you can get hacked, resulting in a complete loss of those funds. You have slashing risks as well. As you saw in the recent outages which happened on ETH proof of stake, it's still relatively new and could have further bugs which result in the stake being lost or slashed. So After that, the validators behave maliciously and they exploit Ethereum and its protocols, resulting in a big payday for them so they can manipulate the protocol. And then that is at the expense of everybody else. So they gain all the money, basically a big payday for them, and everyone else loses. The other thing is liquidity of the liquid staking derivatives. If you look at that and you consider that the low liquidity can lead to significant fluctuations between both the price of ETH and the LSD, as well as the withdrawal times, it can face significant delays if large parts look to exit all at once. So keep that in the back of your mind's eye. That is something that can definitely be of effect towards you if you are staking those LSD protocols. There's a whole list of them on CoinGecko. You're welcome to go look at them. That could be something that will affect your potential gains over there. Regulatory risk. Now, this is probably the biggest one that I think stands out for me personally. Portion of the ETH is secured by a multi-sig, which if compromised could result in funds being lost or locked. So if government entities were to decide that they want to take a part of those keys, well, ultimately then those coins are stuck. They're lost. You won't be able to get access to them again. And then that lines up with centralized risk, right? If using exchanges instead of alternatives such as Lido or Rocket Pool, etc., then the risk of them holding your assets, in addition to the risk of the centralization of the Ethereum network. If a large percentage of stake is controlled by one entity, then you're obviously taking on more risk. And if you do decide that you want to run a validator by yourself, this can reduce some of the risks mentioned, but doing that has running costs, right? It's going to be quite expensive. And on top of that, you have to have the technical know-how, understanding exactly what you're doing. Otherwise, you risk getting slashed once again. So he says, whilst the APR may look attractive, potentially half that when you take into account the fees and the taxes, there's a considerable amount of risk to consider as well. So what are you looking at over here? Well, he says it's not really very attractive to stake ETH at the moment because you're looking at about a 4% APR. Where does this number come from? You minus 10 to 25% in fees alone from the staking providers, and then you're looking at an additional 45% in income tax, depending on which country you're in. So basically, at the end of the day, you're looking at around 2% yield for a huge amount of risk that you're taking on. And I see in the comments there, Fuzzy Pan says, buy Bitcoin instead. I mean, pretty much that could be a smarter move, or you could just buy Ethereum, the underlying asset, and rather just hold that. So if you look at that, that is basically what you're looking at. Also lengthy withdrawal periods. And then for me, the big things is going to be the regulatory risk and then having it locked away. I think that it's great to remain liquid, having the opportunity to sell if circumstances permit to do so, whereby if you're locked in a protocol and you're unable to get out, well, then of course you're stuck in those positions. Okay, let's look at the DXY over here. If you do look at the DXY, currently it is pushing up towards this 104 level. Depending on when this takes place over here, let's assume that trajectory, you're going to meet your next resistance at 104 on the DXY, and then expect a bit of a rejection from that zone, at least a pause. At the very, very least, it won't smash through on the first go. If it does reject from that level, then we're going to be viewing back down towards the bottom of the trend line over here at 100.84. All right, so if we go over here and we have a look at this is the S&P 500 futures chart using the MACD over here. You can see the MACD is crossing above the 0 line on the daily time frame. So maybe a little bit of continuation. This would be in line with what we've been viewing over here. You're looking at around this gray box territory. Expect a bit of a rejection from there and just a pullback. We're not calling for major 𝗵𝗍𝗪 or anything like that. Just a push into this zone, probable pullback into the top of the range high over here, and then that will be the big retest zone. So if you see the S&P 500 come into the $4,300 level, around this 4,300 yellow line, that's going to be your big zone where you need to see if price is going to bounce from there or not. If it does bounce, expect that this rally will continue, and then you're going to have everybody starting to call for a major bull run. Also, let me know in the comments, what do you think is going on in the markets, Bitcoin specifically? In your opinion, is this going to be the start of a bull market, or are we just nearing the very end of the relief rally where things get super heated? Maybe James can put up a poll over there and you guys can vote on that. Also, take a second to smash the like button. It really helps to get the show content out there. Just take 1 second out of your day, smash the like button, and let's continue. All right, we also do have the bull moon. The bull moon has arrived. It arrived on Monday. The bull moon came. If you look outside your window, you should have a big full moon over there. I know I do. And basically, we're looking at our pivot level over here, right? In line with the bull moon. We got our moving averages and the pivot level. We're currently situated right at that exact pivot level, which is coming in at 30,842. Now, Bitcoin bulls need to push price and hold it above that level. Again, this is still the same thing. Not much has changed in the market. You have your pole and then you have a flag. You have a bull flag, which is forming over here. As long as it continues with this consolidation, you're looking at a possible breakout before the end of next week. So I've measured out the prior bull flags. Timing wise, this could potentially extend all the way into next week around Monday, Tuesday. And by then, at the very least, I'm starting to look for a move. Your Ethereum pivot level. Okay, let's turn the moon phases off. We finished with that excitement now. Ethereum is situated well above its pivot level. Pivot level is currently coming in at 1,925. Same thing, as long as it can continue to hold that level and move sideways and slowly up, you expect a later stage breakout. Now, if you look at the futures funding basis as per Willy Woo over here, you can see similar to what we had previously, we had the increase in demand, but price was still declining. So a major divergence which took place over May and June. And that ultimately led to a big breakout, which created this bull flag that we're currently experiencing now. Now you can see flat price action still with increasing demand. This is based on the futures funding rates, and consequently you expect the same thing to take place. Something's got to give, and it most likely leads to another break towards the upside. So you can see this as well. If you look on 𝗕𝗏𝗪, there is risk appetite that's coming back into the market. If you look at the inflows over the last 24 hours, massive inflows coming into Binance, Bybit, as well as BitGet, WooX. If you order it by the 7-day inflows, the biggest inflows are coming into Binance, which always surprises me, right? When you consider the risks involved with Binance around regulation. And we know that they're one of the biggest targeted players. It really interests me that you see still Binance with the biggest inflows and the most amount of trading volume. All the money tends to flow towards Binance. So we'll keep an eye out on that. And this article really breaks down what's happening with the Bitcoin futures premium after hitting the 18-month highs. So it says, is it time to flip bullish? Well, you have to look at a couple of things. So it says, but traders are now questioning whether the derivatives metric indicates excessive excitement, or is this just a return to the mean after a prolonged bear market? So the phenomenon known as a yield curve inversion, here's your inverted yield curve, 10-year and 2-year, is when shorter dated treasury notes are traded at higher rates or yields than the longer dated notes, typically preceding economic recessions. Something interesting I wanted to mention on this is if you go look back, I think Benjamin Cowan covered this very nicely with his metrics and tools that he built. When you look at the inverted yield curve, when it does come down, typically it can take some time before you see any calamity in the market or major recessions. The market can continue to climb the wall of worry, as they call it, and ultimately lead to much higher prices. It also brings me to remember the saying that the market can remain irrational much longer than you can remain solvent. So although you have this inverted yield curve currently taking place, if the market is rising, you want to listen to the market and move in the direction of the market. The trend is your friend until the very end. So what does this mean over here? Inverted yield curve comes down. Ultimately, what Benjamin Cowan identified is that historically, when it turns up again, that's actually where calamity strikes. So although it's one of the most inverted it's been, look compared to the 2008, look compared to 2000, look compared over here to the 1989 era, it's almost similar to what we had all the way back down here in 1980. We're really trending to aggressive levels. When that starts to tick back up, that's when you need to start to worry. Anyway, moving on, the phenomenon known as yield curve inversion. So we just covered that part. Let's go on to the Bitcoin futures premium. So it's popular amongst whales and arbitrage desks. They tend to look at this. As a result, BTC futures contracts in healthy markets should be trading at 5 to 10% annualized premium. This is a situation known as contango. So remember, the futures market should be more expensive than the spot market. So if you look at the futures contract for August, September, October, those should be September should be higher than August, and October should be higher than September in price, because typically assets appreciate up over time, right? So this is one way that you can determine whether the market is returning back to the norm or the healthy state, is by seeing that it's at a 5 to 10% premium. So to gauge market sentiment further, it's also helpful if you look at the options markets, as the 25% delta skew can assess whether the price stagnation has made investors optimistic. So when you look at that, periods of excitement typically have a negative 7% skew. What does that mean? Here's your zero line. Look across over here. That's your zero line. So typically when price goes above the zero line and starts to trend towards 7, that's when a lot of panic is in the market. Market participants are very pessimistic, and consequently they're taking out options contracts where they're betting on price going lower. When price comes back below the zero line and heads towards that 7 read, as you can see, we're situated now at, or negative 7. As you can see, we're situated here closer to the negative 15. That shows again, optimism is coming back into the market. The market's starting to become more and more optimistic about where things are going. So if you look at the 25% delta skew metric, experienced a complete turnaround, indicating bullish momentum picked up on the 21st of June. So just over a couple of weeks ago, about 3 weeks ago, when it dropped below that 7% read. So something noteworthy, you have the inflows, you have the market feeling a bit more optimistic, and then you also have the divergence over here showing increased demand based on the futures trading. So market participants are in fact coming back into the market. And consequently, here we have price, right? A lot of people still calling for a breakdown. I would say that my timeline on Twitter is mixed between probably about half of them bearish, the other half are very bullish. Ultimately, what am I saying over here? Well, I'll be sticking with the trend. The trend is up. I'm still treating this as a bull flag, big move up, consolidation, maintaining these levels. I think that could have already been the sweep below the range. So if this is your range that you're building over here on Bitcoin, this is the 4-hourly chart. Let's just turn that up. There you go. If that's your range, I think that could have already possibly been the sweep. If we do start to lose the 50 moving average, or EMA over here, which is the red one, then I expect a move back down towards 28.9, which is going to be your 200 EMA. I think that would be an opportunity to get long there. Otherwise, we continue to hold our long positions. We've been long for quite some time. And let's see, price is just consolidating. Not much else to say. Ethereum. Let's look at Ethereum. Also, stochastic RSIs on both Ethereum and Bitcoin have reached the bottom and are starting to turn back up over here. So possibly you could get the next move up soon. Here we have the 50 coming in at 1913, and your 200 is coming in at 1,854. That's for ETH. Low time frames on the 1 hourly chart, still again stuck within the range. We've covered this a lot. We are approaching the bottom side of the range, which also matches up with the rising channel over here. So that's, or at least your mid-range and your rising channel. That is an area of interest. I'll be watching that zone. If it does manage to bounce off of this level, then I'm going to move this target up over here for Bitcoin. I'll just target it back towards the previous month's high. And on your super low time frame, this is ultimately the range that you're following. You just want to be playing ping pong between those two levels, right? Expecting a little bit of continuation towards the upside. So percentage wise, what is the move that it's giving you? Bottom down, you're getting about a 3% move and also 3% to the upside. Trade that with a tiny bit of leverage and you can get some decent gains within the market. Let's look at ETH. Okay, ETH is breaking back below its previous month's high once again. You got the range high, which was the breakout level. We're looking to retest into the top side of that at 1,925. If it can get back above the previous month's high, then that target remains, right? That's the next target, 2020. I'll continue to hold that as the next target until such time as I see price holding under the range high, and it's possibility you come back to mid-range and then maybe even back to the range lows, right? Then this would be your deviation. So keep that in mind. That's what I'm watching over there. Let's go on to our bot over here on OKX. This is the trading bot that we set up. We have the orders which have been staggered from $28,000 up to $30,555. Half of those orders have been placed. It's a $50,000 position that we're running. And consequently, if price does come down, we have a plan, right? We're going to be loading up the rest of the position up, down, or down towards that $28,000 level. And then we should be fully loaded into that position. If you do want to follow along with that trade idea, here are the parameters and metrics on the screen. You can literally just pause, zoom in, and you can write down those levels. There it is, 30,355. There you go. I can even highlight that. Amazing. The link is in the description below to OKX. You do get a sign-up bonus. So by using my link, you can get up to $30,000 in bonuses, which you can unlock. There's 3 phases in which you need to do that. Just click the link. It's all explained over there. You make a small deposit and you can unlock those sign-up bonuses. Cool. Next, let's look at Ethereum, because I think Ethereum has been a little bit more interesting right now. Ethereum's main liquidity is, again, $2,000, and then slightly above at the main target that we have at 2020. So don't rule out another spike to the upside. If you look at the delta over here, it is, though, positive. So that spike up might be the last one. That's going to be a liquidity grab. And then I think the delta starts to move towards the negative side again. Those are the smart guys, right, that were longing when everyone was short over here. You long into these top regions, and then once you grab that liquidity, where's the liquidity? Again, over here, just below 2,000, and then another one at 2020. That's where you start to look to potentially flip short again. Okay, Nakamoto list. He says, yeah, everyone is bulled up about Solana, but look at the Aptos Solana ratio, consistent uptrend since Aptos has launched. When buying Solana, why buy Solana, which has bag holders and a high market cap, when Aptos is the fresh new scam in town? So there we go. We got a new scam in town. It's Aptos. They're all scams. Welcome to Scam City. This is the nature of the crypto market, guys. You have to understand that it's the truth of the matter. I'm obviously being a little bit sarcastic over here, but also there is an element of truth. Most of the coins out there are going to be scams. I'm not going to label which ones. I don't want any of these projects to come after me. But most of them are going to be scams. Most of them are a story, a promise that they're trying to sell, which ultimately results in them getting more Bitcoin, more ETH, more of the blue chips, which we know will stand the test of time. And then, of course, there's some of them that are legitimate. You know, some projects that come out and they really are trying to change the world and change the future. But for the most part, you have to ask yourself, do you have to have a token in order to do that? And the answer is no. Why do you need a token for all these things? So these are investment vehicles, trading vehicles, which we use to increase our equity size and our trading accounts. We just play it up and down, right? If it goes up, we play it up. If it comes down, we short it. We don't get emotional and attached over here. So worth checking out. Go have a look at the Aptos Solana chart. I think if you get religious about a particular token, a good litmus test where you can, you know the saying, check yourself before you wreck yourself. This is how you check yourself before you wreck yourself. Let's say you're in love with Solana. Go look at Solana and compare it to the Bitcoin Solana chart, ETH Solana chart, Aptos Solana chart. And basically what you should conclude is that if any of those other charts are in an uptrend, you're better off buying that asset, the one that you may not be in love with. You have to let your love go. You need to let your love go and move on to the uptrends. Okay, let's go into Bitcoin over here on the daily. I was going to go through altcoins, but guys, there's not much that's happened. Let me know in the comments, is there anything that you really, really want to see? I think that we should wrap it up. I think that we've covered the majority over here. There's just very little. What I would say you should do, go and have a look at your coins over here. Let's hide all the drawings. So simply put, remember what I've said to you before, the 200-day moving average. If price is holding above that and it's angled towards the upside, generally it's a pretty good thing. So maybe that can be an exercise for you to go out and do. If you love the altcoins, go and have a look. Is price holding above, and is the 200 angled towards the upside? Let's look at Link. See, resistance. Let's look at Atom. Underneath, angled towards the downside. Render, up. So Render, that's showing you relative strength, right, to the rest of the market. Despite that, you have a head and shoulders pattern, which is over here, and you got a neckline, which could potentially break down, but it will find support again at the 200. RDNT. Okay, not old enough for a 200. We just did Solana. Matic. Below, look, below, angled towards the downside. Cardano. Also, below it, angled towards the downside. Relief rallies should not be ruled out. Relief rallies are a possibility. That's a 17% move into the next resistance. XRP. Ironically, one of the better looking coins out there. I can't believe it. But holding above the 200. BNB. Well, that's a story for you. BNB has in fact lost that level. Remember, BNB has a super, super key level at this $220 mark. If BNB starts to hold below that, all chaos will hit the markets. This is also what? A strong move down, a consolidation. What does that look like to you? It's starting to look like a bear flag, right? Big move towards the downside, and you're creating a flag. This likely leads to a greater breakdown. You can measure the move from there. Let's see. Let's grab our tool over here. Where is our price range tool? So there we have it. That would go to $138 in line with, let's look left to see what's happening over here support-wise. Well, would you look at that? In line with the order block that led to the major move up. If BNB breaks down, that's your target, right? $130, that's your order block level. Cool, let's put that off again, the drawings, and let's look through a few more of these. Okay, BCH, let's see. BCH has been rocking and rolling lately. Huge move. I personally would not long this. I don't know. I wouldn't short it either. You don't want to fade momentum because this could be also a bigger bull flag. It could kind of just oscillate around here, create another flag and move up. But from an overextended perspective, you can see it ran 156% away from the 200-day moving average. Expect a reversion back to the mean. The mean reversion means an enormous sell-off. Let's say you bought here hypothetically. That's a 50% move towards the downside. Litecoin. Okay, way above. Litecoin, big move above the 200-day moving average. GMX. Okay, it doesn't have that much history, but below. Rocket Pool. Not enough history. Compound's been moving heavily today. Also, way above the 200-day moving average. If you do want to get long-term bullish on these kind of things, just wait for the pullback. There will be a pullback when a retest into the 200-day moving average. It will, holding above here, will give it a chance to start to angle towards the upside. You can buy back into that pullback over there. Manifold. Look at that. So liquid. When you see a chart that looks like this, that's just showing how little trading there is. There's gaps in between the trading where there's no trading taking place. That's not the type of coin that you want to be playing around with. AVAX below the 200. Luxo below the 200. ENS, Ethereum naming service, strong downtrend below the 200, way below. Aptos, also below. Injective. Okay, Injective's been one of the stronger coins within the market. Not that much history, but above the 200 over here. Uniswap. Okay, straight into resistance right now. Below, I mean, that opens up a short opportunity, right? Very, very easy. Stop goes above this wick over here, and you can short it down. But I'm not advocating shorting at this part of the market cycle, so that's completely up to you if you want to take a short. I think that we're closer to the end than not. What's the votes on the poll there, James? 60 for what? 60.
Is this the start of the bull market? 60% yes, 40% no.
Okay, 60% of you believe this is the beginning of the bull market. 40% think it's a relief rally. Okay, so there we go. We've also stuck below. FXS below, but it is angled upwards. DOT, let's see DOT. Also similar to Uniswap. I mean, maybe wait for a bigger push into there or confirmation of a breakdown, but very close. Once you get there, reject. That's a short opportunity. GNS, okay, way below. Mask, also below. Filecoin, rejection off the 200. Look at that. Big rejection on the daily off the 200, starting to come down. Vulcan Forged, also below the 200. So you're not too late, guys. You're not too late. Many of you think you're too late. Remember, when the bull market does begin, a lot of these coins will rally aggressively, and you want to go for the new shiny scams. Don't go for the old scams out there. The new shiny scams is where the money is going to be at. Okay, I'm probably going to get into so much trouble for this show, but it is what it is. Smash the like button over there. At least I get the likes for this show then when Rand shouts at me for everything I just said. Okay, Energy Web Token also below. Vela. Okay, nothing over there. ApeCoin, terrible, doing very badly. Lido. Okay, above. It is actually just reclaiming and holding above. SNX, below the 200. DYDX, below. This is an AI coin. What's it called? Toma. I can't remember the full name, but it is above. Near. Below. Optimism. Below. Okay, Arbitrum, not enough history. Rune, shocking. Hook, go hook or go crook. Looks like you're going crook because it's in a extremely strong downtrend. This one over here. That's probably rejecting and making new lows. A0. Okay, also not enough history over there. Alice, below. Kajira, nah, not much to say over there. Cedarfy, below, on its way down. Curve, strong downtrend, easy to spot a diagonal as well over here that meets up confluence of resistance over there. IMX, okay, below, but it is angled upwards because of this big move that pulled price back up. See if it gets above or not. Could be a deviation. Sushi, not looking good. Stacks, one of the better ones as well. Big move up over here. Let's see. This just better not be a complacency bounce where you have a big move up, complacency bounce, and come down. So you can use that as a support level at 59 cents on Stacks. Okay, BitGet token. These exchange tokens, well, BitGet specifically, I mean, this thing has done phenomenally well. I think there's a bit of a dark horse that people haven't recognized over here. Well above over here, and it's creating a big ascending triangle. You can see the diagonal that you'd put over here, equal highs that leads to a greater breakout. Okay, what is this? Perpetual protocol below. Sand, we're almost done. We may as well finish. We've already committed to each other here. We've committed. Let's hold hands and just get through this. Okay, Sandbox below. Trader Joe above, not looking too bad. Mana below. Blur. Okay, Secret Network also below. Strong downtrend probably continues. Might have relief rallies up. Ocean trying to recapture this level, but you can see the lower lows and lower highs. So a lot of work to still be done over there. That just shows you where we are within the cycle. There is still a long way, right? You got Engine over here also below. Phantom. Okay, Phantom angled towards the upside, but stuck below. New swing lows, lower highs, doesn't look good. CFX. Okay, CFX almost reclaiming. Ultra, this is a gaming token, stuck below. But look, this could be a range low, guys. These things can oscillate around here. It doesn't mean that it's going to just nuke all the way down to zero. I mean, these things could kind of just oscillate around this region, creating a longer term range. So you also need to consider where the range is within these. Sol, bad. Super. Okay, Super's below as well. Might reclaim it. The graph, GRT, just reclaiming over here. Again, down sloping over here. You got lower highs, lower lows. Needs to break out of the range, create higher highs. We just covered that. Doge. Let's look at Doge. What's happening with Doge? Okay, same thing. Not looking good. Stuck below. But same thing, guys. Remember, you do want to mark out the range levels because ultimately here's the range levels. I had them up all along. We just didn't show it today. This could still be a range that's holding. I think that brings us to the end. Check out 𝗕𝗏 as well. You do get a big sign-up bonus over there. If you deposit $100, you get $40 on top of that. That's 40% on your initial deposit over there. Trading bonus of 15% trading refund. So 15% off for your first 7 days of trading. And then you get up to $10,040 in sign-up rewards. That is for anyone really, but more specifically if you are in the US and you're struggling to find an exchange because you need a VPN and you need KYC and all of this, you don't need that with 𝗕𝗏. That's it from me, folks. I will see all of you on the next video. Smash the like button, hit the bell notification, and subscribe to the channel. That's it. See you all tomorrow. Cheers for now.